you doing? I'm Ken Bykoff, and welcome to O'Neill Speaks, the official podcast of the Paul H. O'Neill School of Public and Environmental Affairs at Indiana University. Back in 2017, the United States Congress passed the Tax Cuts and Jobs Act, which featured several significant reforms to both individual and business taxes. Some of the reforms focused on itemized deductions in the alternative minimum tax, an expanded standard deduction and child tax credit, and lower marginal tax rates across brackets. Proponents hailed the measure as a much-needed reform that would generate economic growth, expand wages, and put the country on a path to fiscal responsibility. Critics said it was a giveaway to corporations and the wealthy that would only balloon the national debt, and a recent study published by the National Bureau of Economic Research suggests that there was a boost in investment in the U.S. economy and some wage growth, but not nearly as much as was promised. Now, what can't be argued is that several provisions of the Tax Cuts and Jobs Act were designed to sunset in 2025, and there is considerable debate about what provisions should be extended on a more permanent basis and which parts of the act should be allowed to expire on schedule. It's a complicated issue, and I'm thrilled to have Professor Justin Ross joining us to try to sort through the noise when it comes to tax reform. Justin is a public finance economist specializing in state and local tax policy, and his primary research interests include property tax-related issues such as assessment and zoning. He is part of the Tax Reform Task Force in multiple states and is an expert on how tax policy has an impact in the real world. Professor Ross, thanks so much for joining us.
Thank you so much for having me.
Well, first off, what did the Tax Cut and Jobs Act of 2017 originally do? What was kind of the aim of it?
Well, the Tax Cuts and Jobs Act was perhaps considered the signature legislative accomplishment of the Republicans during Donald Trump's term of office. It did a number of things that acted to lower taxes for both individuals and businesses. It increased the child tax credit, it increased standard deductions, reduced or capped a number of other deductions. It flattened the corporate income tax rate from a progressively structured 15% that climbed to 39% to instead just be a flat 21%. The U.S. was one of the last countries still operating on a global corporate income tax system, and this got us off onto a territorial system that most other countries use. And it just provided a lot of incentives for corporations to bring their profits back home from overseas to be part of the U.S. tax base.
So portions of this act were designed to sunset in 2025. Kind of why did they decide that this is how we wanted to go about this and try to have things expire in 2025?
Well, it was very narrowly passed along mostly partisan lines in both chambers of Congress. Now, most of our tax revenues come from fairly affluent households, so the distribution of a tax cut is mostly going to benefit those households, those affluent households, in terms of their tax bills. And this mostly turned Democrats against it. So they basically needed all of the Republicans and even some of the conservative Democrats to be on board with it in order for it to pass. And what these swing voters tended to be concerned about was the effect of the Tax Cuts and Jobs Act on the deficit. Right? So they'd have to go back home to explain to their voters why they would support a bill that increased the deficit so much. Now, the Tax Cuts and Jobs Act is scored by the Congressional Budget Office, and it was estimated to, even in its final form, still increase the deficit by $2 trillion over 10 years. So as a strategy to try and help win over those deficit hawks, or at least to satisfy them in the process to get the bill passed, they designed some of the features to just expire somewhere 7 to 8 years down the road, and that this would reduce by allowing these parts to expire. It would increase the amount of revenues the legislation was expected to produce, and so it made it a smaller deficit figure, and that helped bring those people back over to the side so that they would support the bill.
So what are the current bills that are being looked at that are proposed to kind of extend stuff? What provisions, I guess, have proven popular enough to extend?
Well, what the House has passed so far is the tax relief for American families and workers. And it's now being taken up in the Senate and is considering the renewal of many of those tax and cuts provisions. In contrast to the TCJA, which again passed mostly on partisan lines, This has passed with overwhelming bipartisan support because it basically includes a bunch of things that both sides have on their wish list. And if you think about one of the reasons what makes this kind of tool of making things expire, so many years down the road, one of the controversial things about this is that they tend to make it popular things that'll be likely to be renewed, right? And so they kind of save those things for the things that are supposed to expire. That brings down the expected deficit. But everybody kind of knows, like, oh, well, these things will most likely be renewed. And so this makes it a controversial tactic. But this gets then reflected now where there's a lot of fairly bipartisan support, not just for those renewal things, but then other things that they've put in that bill. But basically, things on the Democrat and Republican wish lists. So there's a bunch of business expensing of research and development, bonus depreciation of capital investments, expensing net interest costs for businesses all these things were set to expire. And the Democrats are getting some larger tax credits, in particular, child tax credits. That was a part of the original TCJA, but they are looking to expand the amounts and expand the eligibility to make more people eligible for it. And so I think the most notable thing that's missing from it that is not in there is the relaxing of the TCJA's cap on state and local tax deductions, which is better known as SALT, standing for state and local taxes. And this is a really interesting partisan conflict to some extent. So the way this works is that you can deduct from your federal taxable income the taxes that you have paid to state and local governments. So the Tax Cuts and Jobs Act capped those SALT deductions at $10,000. Previously, there was no cap. Now, this cap is one of those things that caused the tax code to be a bit more progressive under the Tax Cuts and Jobs Act. You have to earn a lot of money and live in a fairly high tax area in order to end up owing state and local taxes over $10,000. That's so capping that amount was effectively like a increase in taxes on relatively rich households. So if you think about geographically where this matters is for high income people in parts of California, parts of New England, which is deep blue Democratic areas. Now, generally, Republicans dislike the SALT deduction because it's like a federal subsidy to states for having high taxes. So you can think of it as like a transfer from taxpayers in low tax states to taxpayers in high tax states. Progressives, on the other hand, are more mixed on the SALT cap because the deduction is a way in which the high income residents are lowering their tax bill. So they tend to not like that aspect of it because it's a tax cut for the rich. But at the same time, this is something that affects a lot of their voters in their particular areas because they tend to represent areas with high-income voters and with state and local governments that have a lot of taxes to support services. So this has left the SALT caucus that supports relaxing that tax cap in the awkward position of maybe consisting of mostly Democrats from these kind of high-taxed coastal areas arguing for a policy that would be regressive. And so that's the part that has not yet made it back as a part of the TCJA.
And a recent study that from the National Bureau of Economic Research said that there was a boost in an investment in the economy due to this act, and that there was a small wage bump, but not nearly what was promised. When it comes to these kind of things, how much of a challenge is it to balance, I guess, what is projected and what the real world impact is on these things? Because it seems to a certain extent, some tax reform is almost, I don't want to say marketing, but it just you want to, if you are for the tax reform and for the policy, you want to try to put it in the brightest light possible. But in real world impact, that can be very, very different. So when you're putting together reform policy or thinking about those kind of things, how much of a challenge is that to try to be able to sell this to people while also realizing that it's basically you're selling projections that may not come true?
Yeah, well, it's extremely difficult because every type of tax reform is going to be its own unique experiment. So even where we have similar things in the past, they're never going to be exactly the same. It's not like an experiment in a lab where we have the conditions exactly the same from as they were 10 years ago or 20 years ago. And the all sorts of things will be different in the meantime. And so it is extremely difficult to just credibly, or no matter how honest you are with yourself, right, that this is going to play out the way that you expect. And then, yeah, in the cacophony of public discourse, people are going to throw out different estimates about how good or bad a particular policy is likely to do, and and in the case of a policy like this, like both parties, I think, tend to have like a popular within party mythology that they like to believe when it comes to taxes, right? And on the Republican side, the popular one is that the taxes will end up paying for themselves, or at least won't cost very much because it'll stimulate lots of supply side economic growth. And that's part of what is that the party that wanted this to pass, of course, on the Republican side, are eager to believe that when they lower the taxes, that it'll partly pay for itself, at least by inducing some economic growth, and so revenues will do better than projected.
Right.
And I don't know that they thought that it would fully pay for itself, but just the question is like, well, how much? As you said, it was going to induce some growth in those areas, but how well will it actually do?
I think it was projected that like wage growth would be $4,000 a person, ended up being $750.
That's right.
I think that's what the study.
Because the world is a really complicated place. So one of the things that, like, say, that initial scenario was going to be based on was going to be like, well, let's assume that like all the state and local governments remain unchanged, right? Implicitly, they don't even state that kind of thing, but implicitly that's what they're doing, because it's not supposed to be a study of what other local governments, state and local governments are going to do. But as the federal government brings its tax rates down, you incentivize, say, higher tax rates from the states, because now there's more capacity to tax that, and that's going to mitigate some of those kind of effects. And I don't know to what extent that is a part of the story about why it didn't play out the way it did.
Yeah.
But it's just a reflective of that challenge that lots of things are going to change even in response to your policy. Other countries are going to, in response to the lowering of making our tax code more competitive on the global scale, is going to induce a reaction from other countries where they're going to try and match that competitively. And that's not the kind of thing that's going to show up in those initial kind of projections.
Is that what falls into the sunsetting of them, and like 8 years down the road that you might be able to make adjustments, or is that not something that is really taken into account when people are trying to work these bills through the legislative process?
So what they use is they try to account for it indirectly. So like there are estimated historical relationships between many of these policy levers and then how they feed back to economic growth. And to some extent, they're potentially capturing kind of like the history of how other countries reacted to this. But, again, it's difficult for these things to be great pictures of how the world is actually going to play out, so, yeah.
And when it comes to putting together reform policy, what are some of the challenges that come with weighing the potential near and long-term impact of policy changes along the way?
Almost everybody involved in the process is probably going to be judged on a fairly short time horizon, right? People need to get reelected every 2 to 6 years or so. And so that induces a lot of, to some extent, more short-term thinking than you might otherwise prefer. It's hard to think long run when you're in that kind of scenarios, and rightly so to some extent, right? Voters might want exactly that, in the long run. Well, I'm dead, so why, don't get too caught up about the long run. Certainly part of our challenge right now is the way in which the politics of federal budgeting works is not really in a way that is very conducive to, say, long-term fiscal sustainability, right? Like if you were going to describe what a fiscally sustainable equilibrium would look something like, well, if you want higher spending on some program, then you're going to need to find a way to pay for it by reducing money somewhere else or raising taxes. But instead the political equilibrium that we have, and that's reflected, I think, in this most recent bill, is that like, well, you can't have your spending program unless I get my tax cut.
Right.
Or, you can't get your tax cut unless you also pay for my spending program. And that is a bit more like why we see this kind of like perpetual add-on to these deficits that is going to make it, a challenging thing over the longer term.
From a tax policy guy, when you're looking at these different policies and trying to build different policies and serving as maybe an advisor or certainly somebody who looks at this stuff, I don't know if frustrated is the right word, but is it frustrating to have the real world political portion of this to where you can go to a group and say, this is going to be solid policy, and right off out of hand, they're going to say, one side's going to say, yeah, this is great, and the other side's going to say, no, absolutely not. Is that frustrating?
Yes, but perhaps in a little bit different way. So I guess I seldom have the view that like, oh, this is absolutely good policy or bad. Like there's particularly in public finance, there's great room for philosophical disagreement about fundamental questions that we'll just argue about for the end of time, right? So it'd be like, how much revenue do we want to raise? Like what should government be doing? Should it be large or small? This is something that we can argue about to,
Sure.
the end of time. Another is who is going to pay for government? What's the distributional implication? Should the rich pay more? Should the businesses pay more or less? Or, what should that look like? Again, these are philosophical disagreements. The thing that I find more challenging, or I guess more frustrating, is when they ask for square circles.
Yeah.
It's like, well, they don't want it to do any of those things. They don't want there to be any kind of trade-offs, which is an understandable thing, right? Like, if you are negotiating with a car salesman, you would say, well, I want the car for free, and they want you to pay the highest possible price for it.
Right.
And you have to come to the middle somewhere, right?
Yeah.
But in politics, there's just not as much incentive to accommodate the reality that at some point trade-offs need to be realized. And then when you get to then maybe the things that seem sounder, right? So the things that you may be like in the many of the rules that are being renewed in the most recent act, I think that they are particularly there are ways that how should we measure tax capacity? So like if we're measuring what is the business's capacity to pay taxes, how should we do this in terms of expensing research and development, expensing capital investments? And those, I think, have maybe like more solid answer. Like you said, yep, this is the right way to measure the capacity to pay for a particular business.
Yeah.
But in making those kind of adjustments, they end up interfering with the other concerns. Like, well, when we make that a kind of adjustment, it's going to shrink the share that the business pays in a particular year. And so that then entangles those other philosophical questions about, like what should the distribution be, or how much revenue are we trying to collect? And so when there's not a great incentive or willingness to kind of just recognize those and instead demand the square circles, like, well, do it, but do it in a way that doesn't have that impact. That is a part, I think, that is more frustrating. So.
A question that might not be easy to answer, but with the Tax Cuts and Jobs Act, what are maybe it's what is it that is maybe the most solid policy that absolutely you believe should be renewed and should be a part of things that could be helpful, or is that just wading too deep into political waters on that?
No, I guess I think that at the end of the day that the SALT extensions have not been added into the bill reflects some pretty good policy. That there is so if you think about like we're trying to measure a taxpayer's capacity to pay income, right? To pay taxes. Measure what's the appropriate measure of their income. And so when they pay state and local taxes, should we think of those taxes as a reduction in their capacity to pay federal taxes or not, right? At some basic level, I think that it does make sense to say, like, you need to have your police, you need to have your courts, you need to have, items there's some very fundamental services of government
Right.
that you need to have, and paying taxes to prop those things up is like a reduction in your capacity to pay. But at some point, they become more like luxuries of the sorts, right? So like here is spending on a walkable trail or a nice park. And these things, I think, are taxes to support things that look a lot more like personal consumption. They look a lot more like, well, you bought a movie theater ticket, or, you helped pay for, the local sports stadium. These are rather similar, I think, activities at some level. That's beyond the minimum stuff that you need to run a government, and they're more like engaging in local spending for consumption purposes. And so I think that the idea of capping it is a pretty justifiable one in this from this point of view. That for the first $10,000 that you are paying in tax, maybe 10,000 isn't the right number or something, but as a general rule, the first 10,000, you can write that off as a reduction in your capacity to pay. But then after that, you're arguably very much in your form of spending for your consumption purposes through your government. So I think that current compromise of, having it in there for partly is a reasonable one to have.
Well, and it's interesting because tax reform, people think, well, this should be, simple tax reform. We could figure this out, but it is so complicated, and there are so many moving parts on it, because what you essentially have is a code that keeps having things tacked onto it to where people want their overall bill to come down, but you want your taxes to do more and more and cover more and more things. To me, it just seems like it would have to be an extremely challenging thing to even research, let alone implement.
Indeed. And, I think even separate from those kind of concerns, it's just like as the world becomes more sophisticated and complex on the economic side of things, just that it gets more and more difficult. The tax code has to reflect that kind of reality, right? So like, if I drive home from work today by turning on my Uber app and picking up somebody to take them home on my way, in that moment I'm sort of operating like a business, right? And so now it's like, well, I'm not just some employee of Indiana University, but I'm also now like a sole proprietor of this business of. And so now, like for my drive home, is the gasoline a write-off? Then when otherwise wouldn't be. It's just the world is going to continue to evolve in these incredibly kind of complex. This wasn't a problem that existed 10 years ago.
Right, exactly.
Renting out the extra room in my house or something like that for the solar eclipse or any of these other things. They weren't things before, and as they evolve and emerge, you have to update the tax code to reflect that, to try and solve those kind of real problems. When people talk about tax simplification and everything, I think there's always this daydream that we could just do this all on the back of a postcard or something like that. But I don't think what's complicated about the tax code is like how many tax brackets there are and what rate to multiply your thing by. That's very easy. You could do that on the back of a postcard. The tricky thing is just all those other things. Like, how do you measure what was your actual capacity to pay? If you're working from home and you want to, deduct your office expenses out of your house, then this is going to be commingling lots of things. And if we don't do that, then it's like we've created a tax preference for people to work at the place of work where they can deduct the cost of business rather than if we don't solve those things, the tax code creates those kind of artificial preferences. But now we've also made it very complex. It's it is just the nature of the game.
Well, it is. most people I think hear tax policy or tax codes and think it's not all that interesting. I think it's incredibly interesting, and it is a challenge. And I really appreciate the work that you do and the work that you do with governments to try to help them work through the different kind of reforms that are out there. And I really, really appreciate you taking the time to join us.
Thank you so much for having me.
Well, that's all the time we have today on O'Neill Speaks. O'Neill Speaks is the official podcast of the Paul H. O'Neill School of Public and Environmental Affairs. All opinions and comments on O'Neill Speaks belong to the host and the guest of the O'Neill School and don't necessarily reflect those of the school itself. Music for O'Neill Speaks is by Manos Mars. Be sure to subscribe to O'Neill Speaks on Apple Podcasts or on your favorite podcatcher app so you don't miss an episode. We're out of time, but for now, and for the O'Neill School, I'm Ken Bykoff saying thanks for listening, everybody.